Hey, hello, welcome everyone to this webinar to discuss the great climate opportunity. We appreciate you taking some time out of your busy day to join us. Space Capital is a seed stage venture capital firm investing in the space economy, specifically focused on unlocking the value in space technology stacks, such as GPS, geospatial intelligence, and communications. We're actively investing out of our third fund and manage 80 million in assets. And as thesis-driven investors, we're seeing proof that our thesis is valuable and that it provides us focus and direction. Our knowledge is accumulating and it helps us become better investors and more valuable partners to our portfolio companies. And as our research leads us down new and interesting paths, we often publish our findings, which help us stay disciplined and focused on the most important aspects of what we're researching. We're excited to continue our partnership with Silicon Valley Bank. We published the GPS playbook together back in early 2020, which has really been the foundation for our thesis today. And we decided to work together again to publish the great climate opportunity in an effort to unpack the $1 trillion climate opportunity and the foundational role that space technology plays in enabling global climate markets. So we are going to kick things off with a quick 3-minute video to help set the stage, and then we'll have an opportunity to hear from a great group of folks, including the report author and several experts who were in the video and also that contributed to the report.
The effects of climate change are becoming more and more apparent in our everyday lives. Governments can only do so much, and many agree that the economy needs to be a part of the solution.
Financial markets have a huge opportunity to affect change in climate change, massive opportunity, and we need to help them do that.
To save Earth, we may have to look outside of it, to space. The first thing we need is more information about our own Earth, and here transparency is essential. Scientists have found a gap between the reported and the actual emissions calculated by independent models.
There is an absolute need globally to be able to have a scientifically driven benchmark of what the real emissions are around the world. And that's why satellite is so important.
Over half of essential climate variables fundamental to Earth science today can only be measured from satellites. For example, a Montreal-based company named GHGSat has the first satellites in the world capable of verifiably measuring greenhouse gas emissions from industrial facilities.
The best way to drive impact at the end of the day is to work with the source of the emissions, and that's generally with industrial operators. If we can show the industrial operators the magnitude of their emissions and work with them to better understand their emissions, they will eventually be motivated to reduce the emissions themselves, and they will be the best place to affect those reductions.
Companies like Regrow provide a similar service for the agricultural supply chain.
The vision certainly is around the intelligence that allows to make better decisions. We're trying to turn every arable acre on the planet into a carbon sink, into something that is profitable for the farmer as well as good for us environmentally.
We at Muon Space believe that partnering with the science community is a critical part of advancing the commercialization and the applicability of new space to climate. Earth observations, I think in the future, really depend on collaborations.
While these companies measure harmful emissions by industry, Pachama is working on a solution to easily quantify carbon captured by forests around the globe.
If we do this right, we can help drive potentially hundreds of billions of dollars to forest restoration and conservation.
All this verifiable information about the climate creates the foundation of trust that a financial market requires. The large-scale investments that are needed will only be possible with strong confidence in climate data.
I think that there's a huge amount of intrinsic risk for industry in climate change, and getting to a point where we can answer even marginally better how they plan for events, how they manage risk, etc., the monetary impact of that could be huge.
To me, the only way that we're gonna protect our planet is if we get to know it deeply. And there is where satellite technology is essential.
Okay. So next up will be a fireside chat with Tom Ingersoll, my fellow managing partner at Space Capital, and Dan McLeese, who's chief scientist and co-founder at Muon Space. And if we have things set up properly, then over to you, Tom.
Thanks, Chad. Dan, thanks for joining me this morning. I'm Tom Ingersoll, and I'm, in addition to being Chad's partner working with Justice at Space Capital, I'm also very involved in a philanthropic measure program called MethaneSat to measure methane emissions globally, and working in partnership with the folks at GHGSat as well. Plus, I'm an engineer by training and a long tradition in satellites. Dan, thanks for joining me. Dan, maybe a couple words of introduction from you.
Okay, so I'm Dan McLeese. I am chief scientist and co-founder of Muon Space. I am also a participant in the MethaneSat mission as the chair of the Science Advisory Group. I'm formerly chief scientist at JPL.
Great, thanks, Dan. As we've been working together on MethaneSat and looking at a number of climate projects over the past, what's it been, almost 4 years now? What have you seen in terms of the gaps in the data set that are going to be required for us to better understand our environment?
Well, I think the gaps are really very interesting and full of opportunities. And one of those is the measurement of greenhouse gases. National and international space agencies have for a long time now made observations of trace and minor species over the globe. But what's been lacking, where the gaps are, is measurements that have a spatial and temporal cadence that will allow us to identify sources. Where are the emissions from carbon dioxide, methane coming from, and how to associate those with specific facilities. So that's one of the areas. Another has to do with the consequences of climate change, such as wildfires, such as measurements of extreme weather, precipitation, and others. And these are some of the things that we're focused on at Muon Space.
Yeah, what's been interesting in our work with MethaneSat, we have an aircraft variant called Methane Air, who just recently completed another set of flights, and they discovered emissions of the thousands of kilograms per hour going on, even within the United States, where there should be some degree of regulation, and significant increases in emissions over that of what is being reported. So I think there's just no way we're going to be able to control and understand and control what's going on in the environment unless we get these data sets and get substantially more data and verifiable data that can hold some of these producers and polluters to account. It's very, very interesting as we dive into that. What do you see as some of the technical innovations that are going to enable this?
Well, I think most important is moving beyond the very foundations of new space, which is imagery from space, to spectroscopy, to the utilization of signals of opportunity, which are navigation satellite signals like GPS that can be used to probe the atmosphere, surface properties. And these are well-developed technologies and demonstrated through government satellites, but they're only recently becoming part of the small sat world that companies can afford to loft. They are small enough now that they can be handled in the constraints of small sats. So these technologies are ones that I think we're seeing demonstrated now in the small sat community, and I think they have commercial applicability, which is really very exciting.
The other side of that is, and you mentioned, is just the cost of launch, right? Launch costs have dropped dramatically even in the last 5 years. As you know, Dan, we had a budget of close to $10 million to launch our MethaneSat satellite. And in the end, after going through a competition, the cost that we were able to achieve was a third of that, or less than a third of that. So launch costs that have come down substantially to enable systems to get into orbit. The frequency of launch has really improved. I think the other thing that we see is just the impact of cloud computing. It's one thing to gather the data, but as you know, Dan, on our MethaneSat project, processing of that data and being able to turn bits into usable information that people can understand is a very non-trivial project, a challenge, and one that historically, as you know, has been a long pole in virtually every satellite mission. How many satellite projects have you been involved with where the information comes down, right? And we don't know what to do with it all. And it just sits there and it takes us a year or more to actually get data products.
Yeah, I think that's a very important part of the challenge. And I think that entry into this field means focusing on making products that are useful at the end user. And by that, I mean not spectra or simply maps, but what we need for climate observations are quantitative, interpreted products, which people can use in an environment where they don't have to become experts in remote sensing in order to even figure out what the meaning of these products are. I think that's a whole area that needs attention.
Yeah, and I think it goes back to the importance not only of hardware side of this, but the software and the analytics. We're struggling with that on a number of projects where you've got all this great data. How do you turn that into actionable information that people can understand, right? And have confidence in and see how to connect the dots to be able to make change. So I think cloud computing is important. Trying to find software tools that are applicable across programs and developing some software tools. I think there's some good platform work that's going on the satellite side. Some more of that work needs to get done on the ground processing side so that we're not reinventing the wheel over and over and over again. I think there's some other interesting innovations that are occurring. And one I think you and I are involved in is methane sat. The opportunities for companies like Muon and others is there's just such an interesting growth in the number of funding sources. The amount of philanthropy now that's available to support these kinds of missions is really surprising to me. The Bezos Earth Fund is what, $10 billion that they've been allocating from. And there are a number of other philanthropies that are looking directly into doing satellite missions to be able to capture the data. I think as was mentioned in the introduction, the satellite data is one of the best ways. Satellite systems is one of the best ways for us to get the data to understand what's going on. Have you seen any other kind of programmatic innovations as you've been working through Muon and in any other funding sources?
Well, I think the development of cooperations among the people who have the money to fund things, such as you mentioned, philanthropy, commercial ventures, I think those will in the future collaborate. I think there will be opportunities for funds to come from various sources. I think the IP issues will sort of recede into the background as the openness becomes an issue that everyone sort of approaches and embraces because it's so important for collaboration when one is trying to validate results. So I think the funding will then help drive that openness. I think there's another area that's important to recognize, and that is that there's sufficient funding now to try new things and to attract funding sources that might be a bit reluctant to try something brand new, but as you were saying earlier, the launch costs have come down, the opportunities, the instruments, they're all moving in the right direction to take some risk, try observations and see how they impact industry, how they impact society.
Yeah, I think what we're also seeing, and back to kind of the climate opportunity, what is the opportunity? We've been talking with the financial community, who's very, very anxious to get data to understand how corporate players and their investment portfolio, how they're performing relative to important measurements in society. There's this whole ESG, environment, social and governance elements that are important criteria now for looking at investments, and having the data that is required to support those metrics, and that evaluation is becoming increasingly more important. So the finance community is very interested. I had a meeting with I think it was one of the large banks saying that they're very anxious to get methane data so that they can tie the interest rates on the bond deals they do for building like an LNG plant to the amount of emissions that the plant produces. So the lower the emissions, the lower the interest rate. If they don't meet their emissions requirement, interest rates go up. So they are looking at trying to tie performance operational performance to financial instruments and the cost of financing. But right now, there's no data. Back to sort of the lack of gap in data sets, there is no data to support that. So I think there's going to be increasing innovation and motivation for a wide sector. And that's not only the finance sector. Clearly, governments need it. If they're going to do any kind of regulatory work, they're going to need this data to be able to cause change. And I think that's just going to make great opportunities for companies like Muon, and it's going to both feed capital into the market to have these companies grow, but it's also going to be a great source of consumption of the data to help these companies generate meaningful revenue. Any other observations you have in that area, Dan?
Well, I just like to add to that the mix that is the universities. The universities have an enormous wealth of insight, experience, projects that have flown once on agency missions, demonstrated their utility, and then passed over for other priorities. But those are sitting there ready and applicable to the kinds of problems we've been talking about.
And I think that goes back to the opportunity. I agree 100%. There are universities, really very, very capable programs that have been doing cutting edge development and are really looking to pass on some of that great development onto commercial enterprises like Muon to take advantage of it, to leverage it, to commercialize it, and really bring it into a business, because that's not their job. You know, they're there to kind of pioneer, to get to the first step. So anyway, Chad and Justice, that's really what we're seeing from an opportunity set. Not only are there big gaps in the data, we're also seeing a variety of new funding sources. There's great demand for the data from new sectors, both commercial, government, international. Right now, we feel like we're at the very early stage, and we don't know. Right now, there's more demand that can be met, both on the development side. Gosh, even on the satellite side, on the rocket side, it's just there's pull on all sides of the market. And I guess thank you very much, Dan, for taking a few minutes, and I'll turn it back to you, Chad.
Thank you.
That's great. Thanks very much, Tom and Dan. So as we move over, next up is a panel. So Justice, who was really the key point person on the report and the author of the report, is going to lead a panel with some of our distinguished experts who contributed to the report in meaningful ways. So Justice, I'll hand it over to you.
Great, thanks, Chad. Can you hear me okay?
Yeah.
Okay. Great. Well, yeah, I'm really excited that this report was able to come together at a really important and sort of timely moment. You know, a lot of the narrative that we were seeing in the market neglected the important sort of foundation of information that is necessary in a climate response to, you know, ensure that we are objectively able to, you know, respond and ultimately minimize, you know, greenhouse gas emissions. And so it was really exciting to be able to work with a number of, you know, companies that are actually implementing this. And, you know, I believe this is one of the most important and compelling opportunities of our time. So, you know, so my name's Justice Killian. I was a key sort of part of pulling this all together with contributions from you know, everybody on this call today. I'm a principal here at Space Capital, and we have a really incredible group of panelists with us that are really pushing that sort of commercial climate response forward from different angles. So Ann Kim is a managing director and head of frontier tech at Silicon Valley Bank. They're the leading commercial bank focused on startups. We've worked closely with Ann and her team, both on the investing side, and then, as Chad mentioned, in co-authoring multiple reports, including this climate report. Stefan Germain is the president and CEO at GHGSat, a company that's providing global emissions monitoring using multiple Earth observation platforms, including satellites. Anastasia Volkova is co-founder and CEO at Regrow, a company that's building an analytics engine for the entire agricultural value chain and bringing greenhouse gas emission into that value chain process. So with those quick introductions, you know, thank you everybody for being here. I'd like to get started with you, Ann. So Silicon Valley Bank has recently published multiple reports on climate investment, including our report together. The capital flows clearly indicate that there is investor enthusiasm. What do you think changed since the first clean tech boom and bust?
Yeah, no, thank you, Justice, and excited to be here working with you guys again. Since the last go around, there's a lot of things that have changed. First off, I think a lot of investors did not really understand how to invest in deep tech companies about 15 years ago, right? There's usually an assumption about the time horizon when you get capital back from your investments. So for deep tech, really it takes longer. It may take longer than the 10-year time horizon that traditional institutional VCs might make. We've seen a lot of funds recently extend that time period to 15, even up to 20 years. So that's really helpful just as we think about patience and providing a lot of capital to support entrepreneurs and developing companies. Another is government policy. So again, I'm using the 15-year mark as a general time frame of when we had that first clean tech boom. And again, back then there was very little involvement. Now today, 54% of greenhouse gases are covered by legislation to reduce emissions. So really we're going to see a lot of government involvement as we move forward. A couple others are that the cost curve for foundational technologies have really come down. Wind, solar, storage, they've all become a lot more, the solutions have become a lot more cheap and easier just to develop. So we're seeing a lot of conventional technologies using artificial intelligence, machine learning, a lot of advanced manufacturing and other tech built on top of the existing infrastructure. So overall, I think there's a lot of huge changes that have been developed over the past 15 years that will make this go around a lot more successful and easier.
Sure. Yeah, that makes a ton of sense. And, when we published the Great Climate Opportunity, for us, it really was this shift. All of those factors move away from more of a subsidized market to a more commercially driven market, whether it be at the governance level, the financial markets, bringing in pricing, and employees within an organization, demanding that their employers respond to some of these challenges. So there's a lot of forces that appear to be sustaining that. So Stefan, I wanted to move over to you. GHGSat is pioneering both the data collection and analytics capabilities, some of the items that Tom and Dan talked about earlier, leveraging the benefit of cloud computing and so on. You were one of the first to have a satellite on orbit demonstrate the ability to measure greenhouse gases with satellite and now commercialize that offering. So can you tell us a little bit what you learned about building and launching those first satellites?
We learned a lot of things. So thanks for having me on the panel, Justice. It's a pleasure to talk to you again and meet co-panelists as well. So first, I guess we learned a lot of technical lessons, which we implemented in our latest satellites, which just launched in the last year, and allowed us to achieve 10 times better performance than we had on our demonstration satellite. So that's the whole point of a demonstration satellite. But we also learned the value of collaboration. So, and that's with a lot of different groups, with customers, with governments, NGOs, and certainly the scientific community. We work closely with the scientific community in particular to validate our results. And so we had strong collaboration from folks at Harvard that I know that MethaneSat, for example, works closely with as well. And we've done a lot of work with European groups, and in particular in the Netherlands with Esron, who've proven with us the value of the complementarity of small satellites and large national satellites. And that complementarity, again, we hope to put to the test soon again with the launch of MethaneSat when that happens. So we're now at a point where we're detecting millions of tons of methane around the world. That's happening today, right now. It's indisputable. And we need to move as a community, all those stakeholders, towards moving away from R&D. It's not research anymore, towards driving action. And I think that's really the challenge we have as a community that we all need to collaborate together to get to.
And you mentioned, I think, a really important word, that complementarity between these, philanthropic or government-driven projects and the commercial side of what you're doing. So can you highlight how you, see the benefit of what MethaneSat's doing and how you would collaboratively work with them at GHGSat?
Sure. So there's different satellites with different performance and different resolution. And it turns out that most of the national agencies are building global mappers. They want to see the whole world every day. and generally have coarse resolution. And as a result, they also can only really see really, really large leaks. What we've done is we've built a system which is explicitly designed to find facility level leaks, like right down to an individual oil well, or right down to a landfill, or to something that's really, really small. And MethaneSAT fits in between the two, where it can look at larger areas, and it can also see individual sources. It can also aggregate all the information and look at regions. But really, there's a complementarity there in the length scale and in the resolution of the satellite, and in the detection thresholds as well. So having all of these different capabilities brought to bear together, and I think Dan talked about this a little bit before, it's not just each individual data set, it's how you pull them together and turn that into actionable information that I think will be ultimately the challenge here.
Great. Well, shifting over to you, Anastasia, looking more at the applications that are leveraging satellite data. The agriculture industry is one of the largest users of that data. The product that you are building at Regrow uses satellite data and a variety of other sets of data. And you're really getting deep into the agriculture value chain to affect value creation and ultimately change. So can you help us understand how sort of current agricultural practices are impacting climate change and sort of the magnitude of that problem?
Yeah, thank you so much, Justice and Space.
Oops.
We'll be here with our panelists. In terms of really drive the insight here as to, can you hear me?
Yeah, you cut out for a second.
Apologies. In terms of the magnitude of the problem in agricultural practices, we're looking at plowing fields for millennia, and that creates all that carbon that used to be trapped in the soil is now in the atmosphere. On top of that, you of course have various emission spots that are agriculturally related, as Stefan mentioned. So we don't just have carbon go into the atmosphere, we have nitrogen volatilizing as well as leaching into the fresh waterways, and methane. Nitrous oxide and methane are a lot more potent than carbon that we're all very fixated on. We do tend to find a common ground. So we calculate things in terms of CO2 equivalent. This is why we are gravitating towards carbon, but all of them are equally important. The scale of current agricultural impact is depending on whether you include livestock with its methane emissions, or you specifically look at crop production for the purposes of largely feeding livestock and only in a minor fraction feeding the actual human population more directly. You're looking at 20%, so between 19 and 24. The estimates don't agree, but if we sum up the agricultural impact, that's what you're looking at. At the same time, at Regrow, we look at the soil as the carbon bank, that if you create the right incentive and the business model with the data that has been talked about previously, we actually power the business case. We do what's called MRV, measurement, reporting, and verification. What happened, where, and why? And if the farmer adopted better practices and put the carbon into the soil, how much he needs to get paid for it, or she. If the opposite has happened, that the carbon was released, that needs to be taken out of that carbon bank and added to the footprint of the product that will ultimately be created using that raw material. It can be cereals or any other product with that wheat or rice that has been grown. So we look at it grow from the very beginning, see the impact that it has, and trace it through the supply chain. We believe that soil carbon bank, and it's scientifically estimated, again, the more data we have, the better, scientifically estimated that we can sink up to 1/5, again, 20% of all annual carbon emissions. So out of 51 gigaton or billion tons of CO2 a year that we're pumping into the atmosphere, should be able to sink 11 gigaton into soil carbon alone, assuming we can convert all the land into regenerative agriculture, pasture and cropping included. So that's the magnitude of opportunity as well as
Great. So you started to touch on, I think, something that's really important. So we talked about the magnitude of the greenhouse gas impact, but the way that you've been able to develop relationships with your end customer is by creating, highly valuable precision agricultural tools that fit into their workflows, that leverage their trusted relationships, and help increase productivity, early in their operations. So can you touch a little bit about that process of building valuable products, building trust with, agricultural value chain, and how that then led into the ability to launch this new product, which focuses on greenhouse gas?
Absolutely. We started by effectively solving the problem of nitrogen leaching and being overly abundantly used in agriculture. We started looking at it to understand why is it applied, this synthetic fertilizer, in such amount, and understood that this is actually a yield insurance case. If all that you have is the excess fertilizer to apply to ensure that if the weather does pan out, your crop will really be able to pay for all the expenses that you incurred before harvest, you will do it. You will not think about it. But the outcomes that has, the impact it has on the environmental ecosystem, on the actual farm, on its downstream communities, on its regenerative potential year over year is huge. And it's currently an impact that is not quantified into the real cost of our food production. So originally when I started the company, I looked at that problem and was really and have been motivated since to use remote sensing, satellite imagery, Earth observation, modeling to solve that problem. We've realized that the financial motivation, again, the business case around that problem is the insurance business case. And the insurance reduction is not the way to convince farmers to actually change their behavior, but it is the introduction of these new levers that you and Anne talked about. It is this global change of the capital markets desiring ESG responsibility, the customers desiring ESG responsibility, that brought into the picture the ability to pay the farmers additionally, pay them extra to do the right thing by the environment, to really not isolate that external cost, which becomes known as externality. This is not external. This is exactly what happens as a part of the process when you over apply nitrogen, when you plow the land too much, when you grow corn and soy, and not actually what regenerates the land. Now, as a society, it seems to me we've gone full circle and we are going to rebuild the agricultural ecosystem in a very basic way. But as a business, to us, this means that the farmer relationships, what keeps us making an impact, now need to be connected all the way to the consumer, to the food companies that are ready to pay for that impact. Without either of the two, our business case wouldn't have existed. We would.
I think you just ended, or you might have cut out. Oh, looks like we might have lost you.
Apologies.
That's okay. It's okay. So, Anne, I want to circle back to you. We've touched a little bit on sort of the technical aspects and some of the use cases, particularly in energy and agriculture. Are there other major industries where you're seeing, from an investment perspective, where there's a lot of capital flowing and sort of tremendous opportunity for adoption in improving sort of greenhouse gas emissions?
Yeah, honestly, I'd say that every single industry has some plan to focus on climate tech or climate change, right? I think the world understands how important this is. And it really can be explained by just the trends in the VC community, right? So if I take your question and apply it really to just the sources of capital, every single institutional fund has some opinion about climate tech. We're seeing records with venture fundraising for climate focused funds hitting 25 billion, which is really a new record. No one really expected that much just for this year. So, and then second, for the funds, we're seeing that there's such a rapid pace of fundraising. It's a lot more, it's a lot easier and quicker for funds to really focus on climate tech. Usually it takes about maybe a year and 4 months on average, about 16 months to close a fund. Right now it's taking less than 12 months if you're focused on climate tech. And then beyond VC dollars, there's about, I think in 2020, there's about 500 billion invested in decarbonization solutions. So again, it's not really just one specific industry that we're seeing. It's really every single industry has some funds really reserved for this effort. And then lastly, just as we think about the SPAC market as well. So there's been a ton of SPACs that we've heard about, right? There's a lot in the market earlier this year. The volume has died down a little bit, but if we think about between 2019 to the first half of 2021, 58% of all US VC-backed SPACs were in climate tech. So again, it's pretty impressive. The numbers kind of speak for themselves. And really, as you talk about energy, agriculture, it also spans across manufacturing. It spans across even enterprise software, trying to focus on tracking, monitoring, delivering solutions. So it's all across the board.
That's fascinating. Climate tech really is horizontal. It affects every industry in different ways, and there's ways to innovate appropriate solutions. What's unique is space technology is also horizontal capability. It empowers and supports multiple industries to respond. So, those global problems require global solutions, and I think that's uniquely where space and sort of climate intersect as valuable solutions. Your point on the amount of capital being raised, it's a really important indicator that I think is often overlooked, because those VC dollars are going to be taking early bets on companies that will be developing hardware and product that come to market in the next 3 to 5 years. Mm-hmm. So when we talk about these flows, it's sort of a leading indicator of where we're going to see, really exciting, compelling new products, coming down the line in the future. They're not yet here. The folks that we're talking to on this call, they are here, they are building. So it's going to be really interesting to see where that goes.
Yep, you're exactly right.
Okay, I wanted to circle back to Stefan and Anastasia on the customer side. Since you are building product and in the market and working with some of the largest corporations on the planet, I think it'll be really interesting to sort of talk about your experiences working with those customers. So Stefan, several of your investors are oil and gas strategics. They provided you early, customer traction. What have been, some of the highlights and lessons learned working with these customers on their emissions?
Well, we've learned the obvious, and that is that the devil is in the detail. There's a lot of complexity here. So we've had some really big wins, and so we had one, for example, in Central Asia, where we shut down the equivalent of 1 million cars of emissions from a single site, one site. But that required a concerted effort from multiple stakeholders at policy and political levels. It was a huge undertaking. And so business motivations are just as complex in a different way. But there are lots of really solid business reasons for the oil and gas industry to address their emissions. So start with the fact that they're literally in an existential crisis in this time of climate change. They know there needs to be a transition in the global energy mix towards cleaner energy. Add to that the regulatory pressure. So we've touched on this a few times here, but the impact of regulations on emissions is absolutely obvious in our measurements. Add to that investor pressure. So we've spoken about that as well. Debt and equity investments are increasingly measured in part on their ESG performance. So I think Tom was alluding to that during the fireside chat earlier. And then add to that, customer pressure. So seeing the advent of responsible gas which I hope is just the beginning of a proper market for commodities that are driven by carbon content. And then finally, add to that earnings pressure, just good old-fashioned good business. So in some markets, the need for efficiency rivals the need for volume. If you want to make more money in oil and gas, when times are good and prices are high, you just pump more. Well, there's a real argument now to be said you can make as much profit by being more efficient, as well as pumping a lot more volume out. And a lot of these efficiency improvements are about minimizing your emissions and your methane leaks. So our customers know that they're being measured all the time right now. that's really an eye opener, and it's a new world for not just our customers, but for oil and gas in general. And it's no longer a science project. The data is here now, and they know that it's time to act. And that's really the summary.
We've seen some, interesting initial response from some of the largest, oil and gas companies. But, there are sort of these smaller middle market companies that, it's been, they've been consolidating and acquiring maybe some of these higher polluting, assets. Do you see adoption in some of the smaller customers or a willingness to engage? And how do you think about engaging with some of these more challenging or more complicated potential customers?
So we definitely are seeing demand from, I'd say, the mid-tier, where and it's because of the reasons I said earlier, they're seeing their investors, their sources of funding, now tie that funding to ESG metrics. And that's really obvious in the last year. And as a result, we've got companies that previously were all about being the last man standing. They're just going to pump until they've got nothing left to pump and not worry about the repercussions, are now really approaching this very, very differently. So there will always be bad actors or companies that are not going to pay attention because really they're going to be trying to, like I said, be the last man standing. But by and large, I'd say the trend that we've seen first with the super majors and the IOCs, the big companies, big oil and gas companies that have been focusing on top level management driven metrics for reducing their methane intensity. But that trend is now going down to the mid-tier for sure. And I think as regulatory pressures increase, particularly here in the United States under a new administration, I think you're going to see that permeating all the way down to even the smaller players.
I know you've been really intentional about building your product in sort of conjunction with some of these partners, understanding how it fits into their needs and their workflows and their reporting requirements, and meeting your customer where they're at. I think that's super important. You've been able to do that. Anastasia, shifting over more to the agriculture side, you work with very large corporations, international, Syngenta, General Mills, and introducing, sort of this circularity in the agricultural supply chain or value chain, with the sort of greenhouse gas measured and verified solution. How are some of these large corporations responding, and what are their excitements? What are their concerns? What do you see to the sort of barriers to adoption? Oh, we might have lost you. Give her 1 sec to join back. Anastasia, were you able to hear that question, or did we lose you?
I apologize for the terrible internet today. Unfortunately, I captured everything that's
Oh, yeah. It looks like we may have to skip over you on that one.
No worries.
Well, maybe you're back. Let's try one more time, because I think it's really interesting on the customer side. So if you got the whole question, the question was focused. You're working with some very large corporations, Syngenta, General Mills. How have they responded to this measured, verified, greenhouse gas response? What what do they see as the value proposition, and what are some of their barriers to maybe potential adoption?
Absolutely. I would just second everything Stefan said and say that it applies in agriculture and food fully. The value proposition definitely is driven by external investors, C-suite responsibility for those metrics, as well as the customer pressure that translates into making money by either selling more units that are more popular and more interesting for the customers, or
Oh, it looks like we lost you again. So, okay, well, Anne, shifting back to you real quick. I think we're getting closer to sort of our time here. I had two questions that I wanted to wrap up with. So you talked about the flow of capital. I'm curious if you have any insight on how LPs are thinking about their investments in all of these venture capital funds. What's driving maybe some of the motivation in terms of the capital flow side into venture capital?
Well, that's an interesting question, because when you talk about LPs, the amount of capital available from LPs and who the LPs actually are have been growing, right? So before, we used to see pension funds, we used to see a lot of very well-known establishments that were investing into very well-known institutional VC funds. Now you see a ton of family offices, you see a lot of corporates that are starting to also act as an LP. There's a lot of interest right now just to make sure that there is some specific impact. Again, climate change is a phrase that's probably used way too much, but that's something that I've seen on every single pitch deck, right? As VCs are going to LPs to raise for their funds. I think that as we think about just sources of capital, as we think about customers, as we think about anybody in between, everyone has an angle and wants to contribute, right, to reduce any of these greenhouse emissions. Really think about just, I guess, not 10 years from now, not 20 years from now, but 50 years from now. So there's a lot of funds and companies that are even talking about advanced manufacturing in space. As we think about asteroid mining. Asteroid mining is not a new concept, right? We've seen companies talk about this 5 years ago. They weren't doing that well back then, but right now LPs are even asking about that, right? And so I think we've seen major strides in just in the finance community, really thinking about how can we make a difference with money today for the changes in the next 20, 30, 50 years. So it's been really impressive, and it's really exciting just to see all these new faces come out and really support this ecosystem.
Yeah, it sounds like an increasing set of motivations are driving some of the decision making, and the number of actors that are able to participate is also increasing. Yeah. Well, it makes a ton of sense why the flows would also increase. So there's quite a bit of overlap between where we've invested on the equity side and where your team have invested on the debt side. When you look, when you think about both equity and debt, how some of these companies are scaling, do you think that there is enough capital out there to bring some of these deep tech solutions that are focused on global scale problems to market, or do you have any concerns about that?
Yeah, no, I think there's a ton of capital in the market right now. Really, if you just read, if you read any sort of fundraising news about different companies raising, $500 million Series B rounds, or companies that are going through a de-SPAC and really already going public, right? I think that the public markets are really trying to funnel more capital into these companies. I think that there's a new wave of financing solutions as well. Right. If an entrepreneur is used to fundraising, they might only think of equity or debt in the form of a line of credit. Now, because of these capital-intensive infrastructure businesses, we're seeing hardware as a service, infrastructure as a service. There's all these different players that may have traditionally financed just equipment, but now they're really able to think about sources of recurring revenue. How can we actually support companies so that they're not worrying about how to pay the bills. They're not worrying about how to sell one system in order to stay afloat. They're really able to survive off of recurring revenue the way that a lot of software companies have thrived as well. So again, there's a lot of different sources of capital, all the way from the LP to the angel investor side. I mean, it just really spans the whole ecosystem. And there's a lot of different players who want to support the cause. So it's both purpose and capital, which is really making this industry thrive.
Got it. So as a final conversation, we've kept, the focus of this pretty constrained to data that is helping us make better decisions here on Earth in the context of climate. But for the both of us as space tech investors, I sort of want to take off those constraints around the data and think a little bit bigger. So when we think about space technology, what do you think is like the ultimate potential that this will be able to, the ultimate potential solutions that are coming down the pipe, and the role that space technology can play in how we respond and adapt to, climate change?
Honestly, I think we've both said this to the public, that every company will become a space tech company, right? I think that just with the current needs of tracking, monitoring, making sure that we can make smart decisions, right, for the Earth with its finite resources, I think that overall space tech has such huge impacts, such strong potential, and I think that everyone across the globe is thinking about how to make access to space cheaper, more efficient, easier, safe. So I think that, again, for space tech, it's interesting because 10 years ago, investors are very shy to focus on something that was going into orbit, right? Launch costs were still up in the air, satellite constellation. People didn't know how many satellites were necessary in order to have a fully functioning, technology. But now I think that everybody's jumped on board. You've seen large corporates, you've seen, like, even with Richard Branson, Elon Musk, all of these tech billionaires who are coming into the race and really helping move things forward and making the public really open to the idea of going into space. I think that we're going to see a lot of change. The industry is going to, space tech is going to really come into every single company's future purpose, I believe. So it's amazing, just what I've seen, right? And I've been at the bank for over 13 years now, and it's just insane at the amount of interest that's coming in for both space tech and climate change.
Well, great. I think that is a wonderful place to end it. So I want to thank you, Anne, Stefan, and Anastasia, for sharing your thoughts, the incredible work you're all doing, and contributing to this report. It's been a real pleasure to work with you all on this. So Chad, with that, pass it back over to you.
Okay, well, thanks everyone for your time and your interest today. To learn more about the Great Climate Opportunity, you can find the full report on our website, and that link is there on your screen. The findings from this report have already translated into action for us. GHGSat, Regrow, and Muon are all portfolio companies, with Muon being the most recent addition. And climate is a key investment theme for us. As you can see, we are planning to use this report to further build out our climate thesis and guide our future investments in this category. And as we approach the final closing of Space Capital 2 in October, I'm pleased to let you know that all these portfolio companies are doing very well. And with a first closing earlier this year, we've already added the first 6 portfolio companies to Fund 2, with a 7th company closing this week. So very active. And if you are interested in learning more, please reach out to Chad or Tom at spacecapital.com, and we'd be happy to discuss the opportunity with you further. So thanks again, everyone.